What is going on, YouTube? I hope you all are having an amazing Friday because we do have quite the video for today. So we are going to be going over some new Federal Reserve requirements with banks specifically. We're going to be going over the massive T+35 spike that we can expect as early as next week. And then, of course, going over a quick AMC technical analysis and then price predictions for Monday. So right here on the screen, I do have the 1 minute chart pulled up. And for the most part, guys, it was mostly a flat day. We closed positive, actually. Sorry, this is after hours. We did close negative with negative 2.4%. But guys, AMC is so volatile that 2% is literally nothing. And that's why I'm saying we were flat for the day. So we did start off pretty decent for today. We spiked up at open, but then initially came down to test our support that we have here at $32. That did act strong, and only briefly we broke above this. I mean, below this, rather. We did hit a low today of $31.60, but from that point on, we broke back above $32 and was above $32 for the rest of the day, and closed the day at $32.71. So nothing too crazy, and I really like to see this. As for consolidation, guys, I'm going to be honest, we did not see much. I would say our two areas of consolidation, and very briefly, were right around 12:30 and right around 2 o'clock. This was really nothing, but really the biggest thing that I'm looking for is consolidation above our support line at $32, which we did get. And we actually did not consolidate at all below this level. So that is really great to see. We're just going to take a quick look at the one-day chart, just show you guys where we're at. So, of course, like I said before, we're above that $32 support range, which is good to see. And it looks like we are starting to make higher lows. And this is consecutive for the past 3 days. So, higher lows are really good, especially when the MACD is awaiting this massive crossover, when RSI is right at the neutral range, and OBV, on balance volume, is still pretty flat for the most part. So what we're looking for next week, and I know we've been waiting for this for a while, guys. Be patient with us here. We're waiting for this orange line to cross over the blue line and start the bullish reversal up. And of course, it does take time to play out, and just continue to be patient. So anyways, guys, we are going to hop through a couple of quick things here. Some really interesting things. Today's articles come from Sydney, and this is Sid and M26. So what she says is Federal Reserve is now requiring $1 trillion, which is a very significant amount of money, in cash reserves for the following banks, in quotation marks, to survive a severe recession. So it's really interesting that that terminology is thrown around, especially the way the economy is right now. So I found that really, really interesting. So below are the banks included but not limited to, and then drum roll please, Bank of America, Goldman Sachs, JP Morgan, Morgan Stanley, Citigroup, Wells Fargo, and Credit Suisse. So obviously those are like the biggest bank names out there right now, which is just absolutely insane. And this is the actual article that came out. So this all actually does come from the stress test that was performed. So now these are the requirements that they have to put in place to make sure if a severe recession happens, they can handle their balance sheets and make everything work out. But requiring $1 trillion cash reserves is absolutely insane, guys. That is a huge jump up. And we can just take a look at the list here. I'll also link this in the description below, as you all may not be able to see this. I can't even read this, and the damn thing's right in front of me. Geez, I might need glasses. So this is really big news. Really biggest reason why is the economy, guys. I mean, I actually have an interview coming up on Saturday with a very, very intelligent man. I don't want to spoil the news right now, but you can expect a video on how the economy is doing overall, and it is not good, guys. I mean, I've been reading through a lot of information, a lot of articles from the SEC and various regulatory bodies, and it's just absolutely insane what is going on right now. But tune in Saturday. Definitely put that on the calendar because that is going to be big. Now, guys, I know I have been talking about this nonstop, but I'm literally not going to stop because we do have the massive T+35 failure to deliver loop. That is starting next week. So this actually does start on August 9th, which if we check at the calendar here, that is Monday. So anyways, guys, T+35 explained. This is pretty simple. We've gone over this quite a bit. For all you new apes out here, definitely pay attention to this. Hedges have to, quote-unquote, make good on their failure to deliver, which is FTD, within 35 trading days. They will always wait to the last minute in hopes that the share price drops before they cover, which makes sense. Now it just makes sense to cover all at once, right? So we're going to take a look at this chart over here. As you can see, green arrow is the April 15th noticeable spike of failure to delivers. They covered all the rest of the failure to delivers at the same time in the red box, this right here. And then, of course, April 15th, the T+35 date, happened to be June 3rd. What happened on, and we'll jump back to the chart here, June 2nd. June 2nd, we had literally a 90% gain on the day. So, I hate to tell you this, June 3rd, a day before all the shares needed to be back and the good faith action had to be performed, we had a massive, massive day. And guys, one thing I want to clarify here is that was one T+35 date. I did share, and I don't want to go through this and be too repetitive here, but I did go through all of the T+35 dates coming up in August, and we have 5 consecutive days, a 2-day break, and then 5 more consecutive days. So this was one day. Imagine what 10 failure to deliver T+35s in a row is going to look like. It's going to be massive, absolutely insane. And really the biggest thing too is, of course, they're not going to start covering in the $60 range near the all-time highs. Now we're at the lowest point that we've seen since this first massive run-up. So we can expect, if they do decide to close this out, return those shares, it is going to be massive, but that is, of course, if they don't continue to kick the can down the road with various loopholes, which I really don't believe they're going to be able to do because it's just a matter of time at this point. So guys, that's some really, really interesting information piping up here. You know, I think the general consensus of the entire community is very, very bullish for the entire month of August. So this next couple of weeks could be absolutely insane, guys. Just hold on tight because, my God, you do not want to miss what's coming on. And, of course, with this sideways trading action, with us at close to $30, a lot of people have been buying and holding shares. For instance, guys, just take a look at my recent video. Just scroll in the comments section. I have been overwhelmed with comments with, I'm buying more shares. I have thousands of shares. It's absolutely insane. And not to mention the share count, which previously, like way back in April or May, we were trying to figure out what the average shareholder count was, and I think we came up with the number of about 120 shares. Well, now we are finding out that this could be upwards of just about like 1,200 shares per person. And we have 4 to 5 million apes holding positions, and it is just insane, guys. So buckle up. Next week is going to be big. I really, really love you guys. Thank you all for the support and all of the nice comments that you're leaving. And tune in for tomorrow's video because, boy, you do not want to miss that. All right, peace out, guys. Enjoy the weekend and stay happy.